We've got a nice chart on plain defense. This is the put to call ratio. It's in the GTV library for anybody that wants to have a look at it. We are so almost protected up, one could say. It is the favoritism for put calls over puts over calls. Do you think that you have enough protection in the portfolio at the moment? Do you think options is a way to do that?
We are long-term investors. The way we invest is we look for our investors for company by company. What we look for are companies that have got earnings growth for the next 5 years that are mispriced. We do not, as long-only investors, go and look to protect client portfolios. We protect it by actually having the right companies over the longer term. And over the cycle, the portfolios therefore we hope that they will give you the best risk-adjusted returns. Putting puts and taking protections is for short-term traders. We are not traders, we are investors.
So in your investments then, and your long-only investments, is there any region in the world where you see more resilience in companies despite what's happening in the US-China trade war?
I think what we're looking for are companies that are going to give you earnings growth that are secular in nature. So when we look for companies over the cycle, we look for companies that are masters of their own earnings. Of course, there will be volatility of those earnings depending on what's happening with global growth and global trade. But what we're looking for are companies that can keep their franchise, that can protect their margins, are improving their corporate governance, looking for more shareholder protection, their balance sheets can withstand volatility in interest rates. These are the sort of companies that we look for. Therefore, they can be found in almost every sector. Some sectors are more cyclical, clearly, semiconductors, materials, oil and gas companies, and for those we look for companies that are basically able to withstand the volatility that comes from news flow and trade flows and everything that we've been talking about so far.
Ghadir, our markets reporter Danny Berger showed a great chart earlier with a rising correlation in European equities, so therefore lack of dispersion. As a long-term stock picker, how does this affect your strategy? Does it provide opportunities?
Of course it does. What happens when markets are driven by sentiment or news flow or worries that are not very precise and indiscriminate is that markets usually couple and you start having these charts that we've just looked at. That means that there will be companies within those markets that are basically being oversold, and there will be also companies that are being overbought. So therefore, you as an active investor, who's a fundamental investor, can rebalance your portfolio and take advantage of those volatilities, those companies within those markets. It's good for us.